All right, Jasmine took her first trade very recently, CDE, a totally independent trade. That was, I think, your first trade ever. Made about 17% in 11 to 12 days. We're going to talk about the trade in detail. And the idea is not just to talk about the trade so that we feel happy about it. The idea is so that you get some actionable information, because if there's one thing that's lacking out there is actionable information. Countless videos on trading, but I want to watch just a few videos and completely change the game for myself. That's why we're going to run through this trade right here that you see on the screen right now. So why don't you run us through the trade? What did you see? What were you thinking? What was your rationale? What was your entry? Let's just talk about everything in detail.
So I saw there was back-to-back buying happening in the stock with high volumes. If you look
Right here?
Yes.
So this was your area for noticing the stock, some back-to-back buying happening. We have like a 1, 2, 3, 4, 5, 6, 7, about a 7-day strong move.
Yes.
This is a strong linearity. And if we can just simply highlight it very quickly, this is a strong linearity that we saw that lasted 7 days. And did you happen to see the percentage term?
Yes. I wanted it to be around 30 to 40%.
So
At least.
Minimum, she wanted it to be a 30 to 40% move, a strong move. Kuala McGee often talks about a 30% minimum move that we've spoken of. He actually has this barometer of 30 to 100%, but this was a 37% move over 7 days or so, which is completely fine. We have some incredible volumes down here, as you can see. Good overwhelming volumes. We have a nice turnover throughout, so that's not a concern at all. Heavily liquid stock. What else were you looking at?
Then I was looking at how it acted after that move was complete. So
Okay.
it consolidated after that, moved sideways.
It moved sideways, which is quite evident. But was there anything that you were particularly looking for in this sideways consolidation?
No, not really.
I think what we really want to look for out here is that this consolidation should be above the 21 moving average, because if it's below that, then the consolidation becomes exceedingly deep. We don't want to go for that stuff. We want to go for orderly, shallow consolidations, and that's exactly what we saw here. So essentially, I think what we saw here is a Davos box in a sense. What else were you looking at?
After the consolidation, when it breaks out, I was looking at the characteristic of the breakout candle.
Okay.
I wanted the breakout candle to be full-bodied with very less lower and upper wicks.
So this right here is the breakout candle. You want it to be full-bodied,
Yes.
number one, and
A large full-bodied
candle
with small lower and upper wicks.
with small lower and upper wicks, basically going for less volatility, less presence of sellers, and this looks like a pretty good close. As far as I see, the open and the low are the same. So that's a pretty strong sign, because buyers were in control throughout, and the day ended strongly. So would you recommend, if somebody's trading this setup, which could be a flag and pole setup or a high tide flag setup, to take an entry towards the end of the day?
Yes.
Yeah?
Yes.
That's much better, because what if you take an entry at the start of the day and the stock just closes negatively? Kuala McGee actually recommends you trade at the start, right? But he's also very strict with his stop losses. So if the stock is moving up and he takes an entry towards the start of the day, and if it closes poorly, he'll just get out and come back home with no position. Remember, his win rate is 25%, and this is a gentleman that has gone from $5,000 to $100 million with a 25% win rate only. That means if he takes 4 trades, only 1 works. 3 are giving him a loss. You might think he's a horrible trader. 3 give him a very tiny loss, and the 1 that runs gives him an exceptional gain. What else were you looking at?
I think so. I missed my entry at that point, actually.
Right, the breakout candle is where the ideal entry was, but she missed it. Where did you finally end up buying?
I bought it at 12.60.
On this day, right?
Yes.
So what this stock did is it essentially just sort of went sideways right after breakout. And once it broke this very range, naturally she took an entry. That is not the ideal entry, but it's not that bad either. She was pretty much willing to risk it.
Yeah, because I missed watching it. And then I saw
She
it.
missed watching it, and then the stock took off comfortably after that. Your first sale was perhaps made on this day.
Yes.
Any reason why you sold a bit on this day?
I think I sold it on the day before that.
Okay.
When there's a sell, like I saw there was selling happening, the wicks were large.
The wicks were large, lot of volatility in the candle.
Yes.
So taking some profits off the table. Taking some profits off the table is also recommended by Kuala McGee on the 3rd to 5th day, because that means you can get your stop loss to break even. Now, in this case, you'd get out with a small profit even in the worst case scenario. This is how you've got to protect yourself at all times from the downside. And where was your next sale?
My next sale was yesterday.
Okay, and why would that be?
I sold out another remaining, like 25% of my position in this, because I don't know whether this is a sideways move or
Yeah.
the stock's going to go down. So I want
See, I think what she's essentially doing is she's trying to protect her profits. She's a bit scared. It's her first trade. Doesn't want to see it come down. But one good way to take a trade would be plot the 5 moving average, plot the 10 moving average, and plot the 21 moving average, right? A decent way to take a trade could actually be when the 5 moving average breaks, that could be your first exit. When the 10 breaks, that could be your second exit. When the 20 breaks, that could be your third exit. Now, that would mean in poor markets, you might not make a lot of profits. But in good markets, you'll end up making 100, 130%, because a lot of stocks don't actually come below 20 moving average for a long time in a raging bull market. And that adds to your bottom line throughout. Kuala McGee is a big fan of this. You watch countless videos of him and he's like, there will be a few stocks a year, maybe just 4 or 5. They will move to 100% before they come below the 20-21 moving average. So that's the reason he recommends these sell rules. But I think the 5 moving average, so for example, yesterday should have been your first sale.
Yes.
Because the 5 broke and now you should have waited for the 10. So I think for the remaining 25% that you're left with, you can simply wait for the 10 moving average. And the day that breaks, we'll get out. After that, whatever the stock does is actually none of our concern.
You can
We've
always
made our
enter,
money.
yeah, and you can always enter again if you want to.
You can always enter again. Now, one question I have is, let's look at this leg, right? This one leg. Would you call this a strong linear leg, which is something that potentially you would want to trade?
I would call it a linear leg.
Now, the interesting thing is, this one is leg number 1. This is one that we've just highlighted. And this becomes leg number 2, which means now if this should consolidate constructively, and we are thinking basically something like this, if it consolidates something like this and moves out, this could be potentially another trade, right?
Yes.
So this is what we're looking at. The thing is, in good, strong moving stocks, these stocks can make strong legs back to back. Kuala McGee likes to remind us that stocks like to move in staircases. So they go up and then they go side, and then they go up and then they go side, and this story repeats itself. As long as all of this action is happening above the 50 and the 21 moving average, you should be very interested in all of these non-directional tight areas that can give you your potential small risk reward entries. Anything else that you looked at when you were trading this stock?
I did make sure the P by E ratio was not too high, not above 100.
Okay.
And
I think the price earnings ratio in this case is 37. So that's a pretty decent price earnings ratio, not a problem at all. Things get tricky after, I think, after 180, those levels tend to be very tricky. One other thing that I noticed in this stock was that it was repeating this behavior in the past as well. For example, if you draw this resistance, for example, now when the stock moved out of here, this was with another strong linear leg. This one. This was a nice linear leg. What followed was a nice consolidation. After that, we had another leg. What followed was a consolidation. After that, we had a nice linear leg. What followed was a consolidation, and then another linear leg. This is one of the greatest points in stock trading, that the habits and characteristics of a stock, especially in the recent past, tend to keep repeating over and over again. You've just got to take advantage of good consolidations that come after strong linear moves. And once you do that with tight stop losses, you can make decent returns on your investment. How do you feel after taking your first trade, and what do you think the future looks like in the stock market?
I think there's a long way to go, but it'll be good.
Yeah.
It's bright, the future.
It's bright. One of the greatest things that I've noticed in her is she's not afraid of a loss. She's afraid of randomness. She's afraid of tukkabazi in a sense. We were recently stuck in a 12% gap down. You never know when a gap down might hit you, right? So let's jump to GH very quickly, and that will give you a lot of perspective. This was a nice 48% move, and then we had a nice decent consolidation. So this became our entry, and our entry was very well timed.
Yeah.
So it moves up consistently, and then suddenly we have this nasty gap down. Now, in this case, there's not much you can do. I think we got out of this total position with a 2-3% profit. There's nothing much you can do except manage the stock. It could have also gone up, up, up. And lastly, these trades were done because the US market was acting just fine. If we look at Russell 2000 very quickly, we see that it's trending upwards, that it's above key moving averages. It's above all key moving average. Now, Kuala also reminds us that one of the greatest moves will come when the 10 moving average is above the 21 and the market is trending upwards. So these are the areas that are going to make you some good amount of money. This area is an area where you basically should not bother with trading stocks. If you get a good consolidation in this area and a setup, try to avoid it because this is likely to give you a loss. So there is a time to trade and there is a time to stick out of the market, and this naturally is a market where you can take a few positions. I hope you enjoyed this video, and if you thought you have any concerns and you have any questions, please let us know in the comments. Lastly, do you think this is applicable to the Indian markets as well?
Yes.
100%. We are trading this already in the Indian market. It's totally applicable. There's this one stock that I'm looking at right now, but we'll talk about that later. Thank you for watching. And if you enjoyed the content, let me know in the comments. Hit that subscribe button. I'll see you later.